This is episode 2 of Trading Bot Sessions, where we talk with traders who have built automated trading strategies and trade everything from stocks and options to futures and crypto. I speak with Sander Blue, a TradersPost customer with a background in engineering. We cover his journey into algorithmic trading, how he develops and debugs in PineScript for TradingView, and his unique way of generating trading signals from NASDAQ futures to trade 3x levered NASDAQ ETFs, TQs, and SQs, which allow him to go long and short without a margin account. I trust you'll enjoy this episode of Trading Bot Sessions with Sander. Well, thanks, Sander, for coming on and joining us on this. Maybe you could start by telling us a little bit about yourself, your journey as a trader, and how you got into automated trading.
Sure. Let's see. I've been trading now for probably about 6 years or so. And basically I got started getting a little bit more serious about it probably around 3 or so years ago when I started realizing that, there's some pretty decent potential in there, starting to get somewhat decent at it, seeing consistent gains, that sort of thing. Then I guess I got into the more algorithmic side of things, I don't know, maybe about 2.5, 3 years ago as well. And really it all started because of my programming background. So I kind of got into TradingView and then started seeing all the different potentials that you could have there, and then learned a little bit of PineScript at the very beginning, and kind of all took off from there.
It seems like such a common storyline from engineers. I know that's the case for me, and I know it is for John as well. We tend to look at trading from more of an algorithmic standpoint. Do you think that your engineering background played a big role there as well?
Oh, without a doubt. I mean, as an engineer, you're always finding some new project to kind of tinker with, some side project here and there. And I've got multiple domains that don't even have anything on them anymore. This was one of those side projects that turned into something a little more serious, and actually so far has turned out to be relatively profitable for myself. And it's a whole lot of fun, whether you're doing a long-term strategy or you're doing more of a short-term, that sort of thing. And yeah, the whole thing has just been very enlightening and educational. It's been a lot of fun.
So kind of a nuanced engineering question, but I think you do program in multiple programming languages, right?
Correct. Yep.
So which of those languages do you think were more contributory towards thinking about trading from an algorithmic standpoint?
Oh, that's a good question. I actually don't really know if different languages really had too much influence on moving into algorithms, but I'd say that I was doing things, at least more recently, with more server-side things with Go. I thought Golang really kind of actually fit that really well for a lot of different reasons. It's a little bit closer to the metal. It's a fast language overall. It's compiled. It can kind of potentially you could run your code anywhere on any environment, any OS, that sort of thing, because you can compile it down. But I'd say that the biggest kind of aha moment for me was really being introduced to PineScript. And even though PineScript has its limitations, it's growing and in popularity. And they've just TradingView has actually been doing a pretty darn good job with doing updates recently. And I really enjoy watching, and I follow the actual PineScript coders Twitter account. And so whenever they come up with new features and fixes and such, I usually get pretty excited because some of the new things they've been coming out with have been very helpful. Now I don't have as much boilerplate, which is super awesome.
That was definitely one of my questions coming up here as well, was really the journey that you've taken to learn PineScript and what that experience has been like. Do you have any resources you've pulled from other than the Twitter account you just mentioned?
That's pretty much the number one thing in terms of like keeping track of updates that come in. There are a couple different sites that kind of show up when I Google things for how to come up. Stack Overflow actually still comes up relatively often for certain things. I can't remember off the top of my head, Codify, I think, .net or something like that, that actually has some pretty good tutorials in there for beginners and kind of get you warmed up. But the primary reference I use for PineScript is their documentation, which has become stellar. It's super easy to navigate through, especially with the new IDE that they've come up with, that's using the Visual Studio engine, which is super awesome. That was a huge upgrade and big difference in terms of developer experience there. So kudos to TradingView for doing that. So far, it's a huge upgrade for it. I'm really enjoying it a lot more now.
So a little more about your background. Where are you working now, and what kind of role are you taking as an engineer?
Yeah, so I've been a software engineer at New Relic now. For those that don't know, New Relic monitors applications. But yeah, I basically help build the tools that integrate developers to the platform. So I build tech for tech, essentially. So things like CLIs, if anyone's out there, have heard of Terraform, that sort of thing. But I primarily code at New Relic and Golang. And that's just been a really great job so far.
So on the trading side, can you tell us a little bit about the algorithms that you put together as of late? What kind of markets you're trading?
Sure. It's kind of been a transition from more longer, how do you want to call it, longer time frame strategies. So it kind of started out with doing some Momo related strategies where you kind of use the 8 and 21 day exponential moving average and kind of basing that on a couple of the variables and scenarios there to meet criteria in order to make a buy signal and or a sell signal. Those were more of I'd say closer to like the daily time frame and or 1 hour to 4 hour time frames. But lately, I've actually been transitioning a little bit more towards the day trading algorithms and those kind of strategies, mostly because of the choppiness that's in the market right now. So with everything going up and down and up and down and up and down, there is no real Momo thing kind of going on unless you're doing it at a lower time frame. So basically, what I've been doing lately is using futures as my source and trading 3x leveraged ETFs. So I've been trading TQQ and SQQQ based on the NQ futures, so for NASDAQ futures. And this strategy, the primary ones that I've been using, I've got a long and short strategy there. I've actually got 2 shorts at the moment running simply because of the state of the market, and then 1 long. And it seems so far there's been a nice trajectory of increase in account balance over the past several months, which has actually been really cool to watch that happen. But it took a while to get there. It took a pretty good while to figure out what works, what doesn't. And even then, it doesn't always work. So you kind of have to, watch and learn. And I've kind of found forward testing to be really helpful, but I basically have found that back testing gets you to a solid starting point in terms of finding your winning percentage or your profit factor. And yeah, just been kind of working at it each time and kind of watching as the algorithm goes during the day, during the trading hours in the session, and just literally kind of watching it and then seeing where the entries and exits are happening and trying to optimize that more or less in real time as I can moving forward. And that's really been the key to kind of making sure that even if you're getting profit, you're getting a little profit versus like letting it go down and taking a little loss. And that little loss versus a little profit is actually in the long run has proven to be a pretty big difference overall.
So for listeners out there that may not be aware, can you tell us how you're actually doing forward testing, what that is and how you're doing it in TradingView?
Yeah, so as far as I know, the technical term of forward testing is that I'm literally watching my TradingView chart and I'm watching in real time. So this is like intraday in the mid session, and I'm literally kind of watching as the candles breathe, fluctuate and those sorts of things. And I'm watching to see when the candle comes to its final closing, the last 10 seconds or so, to kind of see what happens there and what happens in those last 15 seconds or so, and this is when things are on the line. So sometimes it's very obvious what's going to happen. Yeah, this is going to be a winning trade pretty much no matter what. But sometimes the algorithm and the strategies don't get it exactly right. But those last 10 to 15 seconds of a 3-minute candle could really make or break an actual trade. So I'm watching that particular piece to see what candle comes next and how everything behaves after that. So as far as I know, I think forward testing is more or less like real-time testing and seeing when the signals come in, how that behavior works, and what the latency might be with the API calls that are getting made back to the actual platform. And really and truly, that's been the most helpful in terms of fine-tuning and optimizing everything. Because there were certain times before where I had a set take profit or something like that. And even though it's great to have a set target to take your profits, a lot of times, these strategies and these algorithms could continue running for quite a bit longer. So that real-time testing really helped me optimize those particular types of wins where your wins are bigger and your losses just still stay the same. So that was kind of another key for making the next leap up, was saying, all right, we're consistently winning, a high percentage of, 75% or so with a winning percentage. That's just an example, hypothetical, but that's kind of where I was trying to get to. And then once I get to 75, you try and basically optimize your gains so that if you do have a loss, your gains are going to outweigh it in the long run, especially if you have something that a strategy could be. You could technically win a third of your trades and be profitable if you know how to manage taking profit at the proper times and letting your runners run and always being consistent with your risk management on the bottom side.
So do you have a sense of what your current profit factor is for your strategies?
Yeah, I've been averaging right around, I don't know if it's a good number, not to be perfectly honest, but I've been averaging right around 4 to 5 as a profit factor.
That's great.
Which is, from what I can tell, seems to be, for me, at least with this short-term, very quick trade type of strategy. Wouldn't necessarily call it scalping, but it's pretty close to a scalping kind of strategy, I would say, on both sides, long and short. But yeah, the profit factor has been right around 4 to 5. And when the runners get a good run, especially on the short side lately, they've been quite profitable, which is really nice.
And I guess given your exposure to those levered products, that explains the profit factor, right? Because you're getting a lot more upside on the leveraged ETFs.
Correct. Yeah. So especially when a big move happens, that makes a big difference. So for example, while I don't like to have strategies necessarily run during some crazy announcement from the Fed or something like that when they're going to raise rates, I have decided to go ahead and let these particular strategies run through those just to see how they handle the situation. But so far, it's been able to handle it pretty well because the stop loss and the risk management is there. Actually caught a really good trade on a really wild swing the other day. It was probably one of my best trades. That basically, like within 4 to 5 minutes, it was a 7% gain trade, and was out really, really quick, and was one of the better trades of the strategy, which is pretty cool to watch. So
Was that the recent core CPI release?
It wasn't the recent one. It was the one before that.
Yeah, I figured it was a CPI day because those have been the most hairy at the moment.
It was a CPI day, that's for sure. Yeah, it was a CPI announcement. No.
Gotcha. The way that you're describing, sort of the way that you're monitoring TradingView and your strategies simultaneously, is it fair to say that you're almost taking kind of a hybrid approach here between deciding when to turn the strategies on or off? Like, how much do you intervene in your strategies?
I tried to never intervene, quite frankly. The biggest reason for that is, well, you wrote it to be automated. So, you don't want to have to think about it. You want to see how well you want to let it do what it's supposed to do. And I feel like intervening at least for these particular strategies, I've tried to make them as robust as possible so that I don't have to think about them. I don't have to intervene. So far, so good overall. I mean, we'll really have to tell as time goes on whether or not that actual idea works. But a while back, I will admit that there were certain points where the strategies weren't not those strategies perfect, but they weren't as fine tuned as they are now. So let's say for maybe a year ago or so, there would be certain times where maybe an announcement, some big things about to happen or earnings seasons coming up, you might turn off one particular short or one particular long strategy in order to try and avoid volatility with that sort of thing. But that's, a while back. And now I'm kind of trying to make sure that the strategies are robust enough to be able to handle volatility and catch the moves when they're up or down. Hopefully it all balances out.
So what would you say is your current favorite strategy? I know you said you've got basically 3 running at the moment. 2 are more short and 1 is long. Which is your favorite at the moment?
Well, I'd have to say my short one is the favorite one, simply because right now with the nature of the markets and the volatility, when the market decides to move down, it moves down dramatically and pretty violently. And that particular strategy, I call it a Momo strategy because it's kind of queuing off of, the speed at which and the rate of change that things are happening. So I think that one's probably my favorite one because this is actually an interesting thing. So my more bullish one has a very high win percentage, but maybe a lower net profit. Whereas the short strategy is more of like a Momo type of thing, and looking at rate of change and standard deviations and that sort of thing. And when that thing hits, it hits big, usually hits very big. The losses are quite small, so the drawdown is very little, but when it hits really big. And I think its profit factor is something like a 9 or a 10 over the course of the last 6 to 7 months, which is pretty cool. Yeah, but I'd probably say that one's my favorite one. Again, time will tell if it's robust enough, and every time some new scenario kind of shows up that something's missed, or maybe I needed to change some indicator value of some sort, I tweak it just a little bit just to see how it performs over the next set of time frames or whatever. But so far it's been my favorite, I guess.
So I have a question here. With your favorite short strategy, if I'm understanding it correctly, you're using the Q's futures in order to inform the data for your strategy, but it's actually trading the TQs, correct?
Correct. Yeah, it'll use the TQQQ or the SQQQ.
So have you noticed any kind of divergence in terms of the way that those ETFs are tracked? Because effectively what you're saying is that the TQs and the SQs are tracking the underlying index, but you're informing your trade decision from the futures contracts. And there's often a disconnect in the relationship between futures and
Correct.
equities. Have
Yep.
you noticed that show up at all in your trades?
Occasionally, for sure. Sometimes so part of the back testing too is I'll put labels above my entries and exits and kind of see what the TQQQ price was, or the underlying price was for what I'm trying to actually trade. And sure, every now and then there will be a decent slippage, is what we could call it, I guess. It's not actually slippage for the actual NQ futures itself, but it's slippage for the actual trade. I would say that that's just a nature of the game and a risk that I'm willing to take. The biggest reason that I use futures to make informed decisions about trading the ETFs is there are no gaps, basically. And so your moving averages and like overnight, all of those things are much more consistent and are a little more trustworthy. I would say that that would even be even more important with a higher time frame strategy as well. So if I were to do something for like on the 1 hour or the 4, I would probably still use futures information regarding that. But every now and then, yeah, there's definitely a little bit of slippage. But so far, it hasn't been enough for me to get alarmed about it, I guess.
Understood. So the longer time sessions in futures give you a lot more data about the directionality of markets, perhaps. How do you deal with the contract rollovers then for testing longer back test periods?
To be perfectly honest, I don't.
You just test the whatever range is available on the current contracts?
Yep.
Understood. So I know that's kind of a nuanced question. If anybody's curious, what we're basically saying is the contracts that you're looking at expire every quarter. And so you only have about 3 months of data to work with if you're towards the end of the contract. Otherwise, you'd look at the previous contract that's about to expire for your back test, right?
Right. Yep, that is correct. And there have been times somewhat recently where there were some interesting differences between the two. I mean, at least I guess at one point there was probably close to a 40-point difference at one point. But the bottom line is that the candles and futures prices of those levels aren't necessarily as important as the direction and the candles themselves are. So, the futures could be, those two contracts could be different at different price points, but they're still going to have very similar formations in terms of the candles, their depth and their tails and all that, and the bodies. So, and they're also going to have very similar averages in terms of moving averages as well. So the indicators are still probably going to work, and so far, so good. Indicators have worked just fine through that sort of situation, just because it's more of a relative situation in that case. Because I'm not trading futures directly. That would be different.
Any reason why not?
Just been more focused on optimizing the current thing that I've got going that seems to be working. So it seems to be working pretty darn well. And they say don't mess with success, but so I'm just kind of trying to optimize as things move forward and trying to be kind of hyper focused on one thing, get it really, get high confidence in that sort of thing, and then move forward from there. At some point, I have definitely shown interest of trying to move towards futures. I just haven't really made the move yet. Just haven't had the time, I guess.
So we know you've been at this for a long time. Maybe you can walk us back to the beginning here and give us a sense of what it's taken to learn what you know today and some of the trials and tribulations that have brought you to this current set of strategies.
Okay, yeah. So I'd say the first one that really caught me off guard when I was doing these strategies around were the longer time frames, and it comes back to when I mentioned the gaps. So if your strategy is basically looking at SPY, for example, when SPY decides to gap down 2% and you've had a long position in, what do you do? Like, your trade is potentially completely done for at that point, and you've been in the trade for however long you've been in it, and you might just have to take a loss simply because of the gap. That was one of the biggest gotchas for me, was in having to deal with the gaps. I'd say that it's taken me, I don't know, maybe about a year or so to really get to the point where these strategies, or maybe like 6 to 8 months to get these more short-term, quicker trades a little better.
Have you discovered anything along your journey that you think was one of the biggest aha moments for you?
Yeah. Okay. So yeah, I would say one of the bigger aha moments would be calculating a strategy on every tick. So I'm actually at a point now, this aha moment actually was somewhat recent, so that's probably why it's coming to my brain. So a while back, I had this 3-minute chart strategy moving forward with calculating on every tick. And that proved to be really tricky when buy and sell signals would come in on the same candle. And so managing that was quite tricky. As a matter of fact, when I first started getting involved with that, TradingView would actually stop my alert from going through because it would max it out at 10 or whatever the rate limit is for that particular alert. And also would just contradict the trade. So that was kind of a nightmare. But I have found that calculating on every tick is probably, for these faster moving strategies on a smaller, lower intervals, are pretty much, I think, are going to be necessary to truly optimize this to the best that I could get it. And so I'm in the middle of working on trying to make sure that I only get one signal or two signals per candle, and basically using calculate on each tick. But I haven't implemented that just yet again. So I got rid of calculate on every tick because that was causing issues, and the strategy has still been performing pretty well over time. And I just had this hunch and belief that there's so many times in the forward testing that we were talking about earlier, there's so many times before where I could have sold it at a certain particular point based on criteria in real time. If I were calculating on every tick, the profits would have been, much larger on certain particular plays. And same with exits as well. Exits would have been, even better if I would have been doing that sort of thing. The aha moment was saying, oh, I can actually flag to make sure that when this alert is actually alerted, don't alert it again. Just wait until the end of the candle. That sort of ordeal. Let's just make sure you have those checks and balances. And that was a big aha moment for me, at least for the short-term stuff.
At what point along your journey would you say you really started to get comfortable with the process and really started to feel like you had dialed in an approach to trading algorithmically?
So that, I guess, with an engineering background, I started feeling pretty comfortable with getting into the algorithm side of things pretty quickly, I'd say. I started to really pick things up by watching the charts live and doing the back testing, and then really digging into the candles and kind of seeing how it behaves. And I'd say that, I don't know, within maybe the first few weeks, I had something that seemed legitimate and seemed like it would be working. And it actually did work pretty much fairly well. And then I started optimizing and changing things. And then once you start changing things, you start changing more things. But overall, the comfort level is, it happened pretty quick. And thankfully, a couple of reasons for that would be the environment in the coding side of it it's not a bad environment. It's actually a pretty comfortable environment. And their documentation is fantastic. And all those sorts of things at the very beginning really were I guess I had a kind of a comfort level with it in general, because I kind of have been in that like profession, I guess. Once you build a simple strategy with indicators, for example, if you're doing something with Bollinger Bands or something like that, they have so many different preset things in there already that you can kind of build something from right off the gate. And then you kind of pick things up from there pretty quickly. And then as you move forward, you kind of go, oh, that's what this does. That's what this particular thing does. And then one thing leads to another. And before you know it, you're a little bit more, you're deeper into it than I think you think you really are. For me, I'd say within a month, I was hooked. I was in it. I was like, this is definitely something that has serious promise and has some serious advantages to it, especially if you stick with it. Over time, it has proven to be pretty legit. It's pretty cool.
So outside of TradingView being a good resource for not just developing your signals, did you pick up an education in finance and technical analysis concepts elsewhere?
I guess so. Just from my generally being involved in it, I don't really know how to I didn't go out and look up, I didn't pick up an encyclopedia or anything like that to try and figure out, the bigger picture of the financial markets. I've read a few, online things, and I've read a few books. I think I have one of them back in the day, which is more long-term ideas for investing. It was like Mr. Money Mustache. That was a good one. But a lot of it has just been, crowdsourced through all kinds of different areas, just watching and listening and learning over time. I never really did anything too formal, I guess I would say. I've learned more about long-term investing just by proxy, and the actual trading and algorithmic side of things. I don't really have like anything specific. It's just been quite literally Google and see how it goes.
Which might be argued that that's part of how we engineers tend to learn our engineering skills, right? Is just Googling and figuring out what's the best approach for a problem.
Right. Yeah. And see what other people have done, and then see what flavor I can make of it on my own, and see if I could optimize something like that. And then before you know it, you're making something that's unique to you. but you have to have some sorting, at least I did. I had to have some sort of starting point and some reference point to kind of like figure out what everything does. Like a really big one for me actually was debugging. Okay, if we're talking about the aha moments from before, like another big aha moment was like, how do I debug in TradingView to like see what the price of my underlying is, or how do I see what the slope of the HMA is, or what the rate of change actually is. I might want to see what those numbers actually are at my point of entry and point of exit and that sort of thing. So finally I realized, oh man, I just can actually pop labels. I can plot different shapes to indicate which candles are like the important ones that I want to look at. I have a couple of libraries that I've been kind of working on. In particular, one that I've kind of started using, a utility library that kind of like helps me out with those calculations. Yeah, that was probably one of the other big aha moments, was debugging and figuring out what was actually going on and what I was assuming was correct, and getting that was really cool.
Do you have links to those utility libraries that you use in TradingView so I can pop those in the show notes?
I can make them available, yes.
Awesome. I'll put them in. Given how unique your approach is with your strategies, where you're deriving your data and your signals from the NQ futures on TradingView, can you walk us through how the trades are actually executed from there and what brokerage you're actually executing them through?
Yep. So basically the way things are working now is that obviously we're using the NQ futures to trade the underlying stocks of the leverage ETFs, so TQQQ and SQQQ. And I have two separate strategies kind of that work on either side of those things. And so when a buy signal comes in on the NQ, and let's say, for example, we're doing a bullish alert on this case going long. So when NQ goes up, we get a signal with the correct formations and criteria that we're looking for. That actually is then executed and sends out a buy alert via webhook in TradingView. And that webhook in TradingView then sends this buy alert with the JSON based on the information. So since we're making this a webhook, it sends a JSON payload, and it's sending the JSON payload to TradersPost, and TradersPost at that point kind of takes over and communicates to my brokerage. In this case, is TD Ameritrade. For an end-to-end kind of explanation of it, it's basically TradingView alert comes in, the actual alert is then triggered, and the webhook is the alert that gets actually sent out with a JSON payload to TradersPost, and then TradersPost actually executes the trade for me, which is fantastic. So I'm never even trading or anything like that. TradersPost handles everything once the webhook gets sent over, and the bits and pieces of information that I actually send over are, so the action, which would be a buy, I send over the signal, basically the signal name, and that's actually just a piece of metadata for myself to know which signal is actually coming in. And that's another piece of debugging right there. And then obviously I need to send in the price and the quantity if I'm using a specific quantity that I want to trade with. So TradesPost has the combination of, you can either do, you can choose, basically it's very configurable, which is great. So you can actually choose if you want to use the quantity in your webhook signal, or you can choose if you want TradesPost to calculate for you in terms of like the percentage of your account you want to trade for each trade. So when I first started out, TradersPost was using 20% of my account value to actually make a trade. And then over time, I've kind of learned that if I can manage certain, let's say if I want to like exit out of different tiers, exit out of my strategy with one first tier being 50% of what I'm holding, I can calculate that in my TradingView strategy and still send that alert signal to TradersPost to be able to make that trade by using the signal quantity itself that comes in through the webhook, which is pretty cool. And then if I want to have an exit strategy for like exit level number 2, I'll also send an alert in for that particular price and quantity, and TradersPost will execute it based on the quantity that I have it in the JSON of the webhook. But that's kind of how it works from end to end overall. The cool thing is that it's very hands off, and once you set it and it's basically set it and forget it. At least for me, that's what I try and do. Obviously, I watch it from time to time to make sure things are going all right. But the whole idea with TradersPost is, for me, is just automate as much as possible and get my emotions out of it, because emotions I have learned myself that having something automated works better for me.
So a little to unpack there, I think some of the flexibility that you're describing in TradersPost is, one, that you're getting that signal to buy or sell from the NQ futures, but in your payload, in the alert, you're defining the ticker that you want it to trade.
Correct.
So it knows we're not trading NQ futures, we're trading the TQQQ or the SQQQ.
Correct. Correct.
Makes sense.
And quite frankly, you can target any ticker you want. So in this particular case, while I'm making an alert off of NQ and I'm using TQQQ and SQQQ, I could use a 2x leverage ETF if I would prefer, or not even. I could trade the underlying. I could trade QQQ itself if I really wanted to. I keep saying underlying. That's not really what it is, but but yeah, I could trade QQQ directly if I really wanted to. But I've found that, we're using the leverage ETFs because it seems to be better in terms of, especially with liquidity. I will say that, the TQQQ and SQQQ are super high volume, which actually makes it really good for using market entry and exits. So you want to make sure you get in and out of your particular trades. In this case, because I'm doing things on a shorter time frame, I want to make sure I get in and out of these trades before something goes, already in one direction or another. But the market entries and exits are working quite well, even though some might say, use limit orders for particular strategy so you get the price that you want. But since liquidity is so high in those particular tickers, it works really well.
Well, thanks very much, Sander, for covering all of that. If anybody wants to follow you or get a hold of you, is there any social media that they can find you on?
Sure. Pretty much the only one that I use these days is Twitter. You can find me at Sander Blue, SanderBlue. And you'll probably find me tweeting about or retweeting some TradersPost stuff because I love TradersPost. And you'll probably see me tweeting potentially some programming related stuff because, basically it's my job and it's my hobby. So I love programming all around.
Well, thanks so much for offering your time here on this again, and we'll chat with you on the next one.
Yeah, it's been a pleasure.